Okay, people, welcome back to another day. It's Christmas Eve and I took my first trade yesterday. Yesterday was 23rd, so I took my first trade yesterday, actually first two trades, and as expected, right, like I said, this video is literally going to show my first two trades. Now, don't expect much. I made X amount of profit. I won't say it right now, but I'll just say I made X amount of profit. The number is going to shock you, but let's just head into the video. And if you're new to this place, if it's your first time of coming into this video, it's like, just seeing this channel for the first time, this channel is literally just going to be majorly a journal, majorly. So I'm going to be take a trade today, record it tomorrow, take a trade tomorrow, record it the next day, record it that same day, put it out there. And this is because I do not know how to keep the journal in just a written form. If you're like me out there and you're finding it difficult to just write your journals of your trade, not just trading, anything at all, whatever you do, financial journals, diaries and the rest, I think making a video about it will really help you, just like the way I'm doing. And I'm not just making these videos to keep in my my own file or on a hard drive or on my own cloud. I'm putting this video out there on the freest cloud in the world, which is YouTube, also for people to watch and people to also learn from my mistakes and also my proper doing. But without further ado, I'd like to say welcome to the channel. Please hit the like button, hit the subscribe, and feel free to make comments on what you think should be done in these videos or for the videos, or maybe mistakes I made, things you see that I could change. Feel free to hit it down on the comment below. I would love to read your comments. Let's head right into it. So some days ago I did my analysis. Now I'd like to take you guys through my analysis process, but this will be a different video. Taking you through my analysis process is going to be a different video entirely, because my analysis process is quite long, to be honest. Quite long, not really long, but like 15 to 30 minutes long. So it requires like a lot of things. I need to look at the economic calendar, I need to look at the currency strength, the volatility, the market movers. I need to look at the one major thing is a heat map, currency heat map. I really love to look at currency heat maps because it tells me, okay, this is what is really happening within the time frame. But my whole strategy analysis, fundamental analysis part of the strategy, is something that will come in later in time. For today, I'm gonna head straight into the analysis of how I landed where I landed. So we're gonna start with the monthly. Now you all know I really want to be a swing trader, so we're gonna start with the monthly. And there was an analysis I had some other days ago. I'll put the video up in the link above, where I made an analysis and I said, okay, point 1 and point 2, like expectation of price to get to these various destinations in the given time frame of within probably a month or so, 2 months, but price is likely going to go in that direction. We're not certain. Now you need to understand everything about trading is absolutely uncertain. It is just probability. What you think will happen based on your judgment of what you see on the chart. That is what it is. So what I think will happen, I may be wrong, I may be right, but what I think will happen is price is going to hit the point 1, hit the point 2, and probably slide a little bit below that, then take off and reverse. But anything could happen, but I'm just more focused on the point 1 and point 2. Now my mentor personally, the person I look up to, Ayo, he has clearly warned that December trading, especially during this end of year period, there's way less volatility in the market, and those period of time you should just keep away from the market. Basically, it's best you just keep away from the market because the volatility is so poor. Liquidity might not be there in the first place because central banks are going on holidays. Lots of the investors, like big banks and the rest, are most likely not going to be placing trades because this is the end season, everybody's chilling. They could set trades but not really all that much probably. But nevertheless, it's not as if the market will not move. The market will move because there's always somebody trading at every given point in time as long as it is open. So I think that was the first thing we need to get off the chart. Now let's go straight into this. We're going to start on the monthly. On the monthly, I like to start with the monthly. So I grouped my entire analysis into into the object tree so I could be able to dive into what I see on the monthly. So on the monthly we have a monthly fair value gap. Now the name fair value gap is something that has been very popularized by ICT, and fair value gap basically is talking about, imbalance. So if you don't know what fair value gap is, I think I'll put a link to Ario's video, fair value gap, somewhere around here in this stuff. You could go learn it. Maybe someday I'll teach it, but you can go learn it from Ario for now. A lot of ICT traders also teach what fair value gap is. It's just the space between the lowest or highest point of a first candle and the lowest and highest point of a third candle, especially when they do not touch. So for example, you can see why I drew this. This is a fair value gap, and if you look between this candles high, low, and this candles high, there's no space between. So basically this is a fair value gap. So but he calls it fair value gap. Other participants may call it imbalance. Some people may call it impulse, something like that. But what this clearly means is price got to a level where the supply exceeded the demand so much that price started to fall. So it means there was so much supply and so little demand, price goes down. Now I'm looking at it from two angles. Now the thing with ICT's concept and Ario's concept is it is theoretical. You might not really think of the major backing behind the concepts, like the realitative backing, like the reality behind the backing. Like, okay, so price of things are supposed to go up and go down based on supply and demand, which is the truth. And what really affects supply and demand? Government policies, central bank policies. That's what really affects supply and demand. And also economic factors such as, is the economy doing properly, is the economy doing fine, is the economy doing bad? Every of those things affect the supply or demand of a currency, especially when you put it based on the other currency. So what's the supply of euro, what's the demand for euro, what's the supply for dollar, what's the demand for dollar, and then pitching them against each other. That is where we get this chart from. On the monthly, we found the fair value gap at the top right there. Fair value gap, pretty clean, easy to understand. It simply means that we're expecting lower prices. Two things we actually expect. Now, there's a higher tendency of lower prices, that's one. There's also a tendency that price is supposed to return into that, area where supply exceeded demand. But right now, we notice that candles are further going downwards. So it means the market is heavily pushing towards the sell side, going down towards the sell side. That's an ICT term also, but it's majorly going for a place where it will find enough demand. Now, because I found the fair value gap on the monthly, with the strategy, I'm not supposed to even really care about the weekly, but we could care about the weekly, but not really supposed to care about it. I could just jump straight into the daily. So to cut this short, let's jump straight into the daily. Now, I just included my daily fair value gaps. And if I go down on the daily, and this is still my monthly fair value gap, I see price, sinking. What am I really looking for? I'm looking for a fair value gap within a time frame I prefer to trade with. That is what I am looking for, to be honest. Now, I want to trade swing trades, but I do not want to hold trades for like weeks. I want to hold trades for like days, you get? So it's best to deal with things on the daily, weekly, 4 hours. That is why swing traders tend to stay on those 30 time frame. But you can go as low as 1 hour, and that is where you should stop. That's the worst you should get to as a swing trader. And I made a big mistake on my second trade. I will unleash that as this video goes on. So you need to just stay for a while, watch it to the end, and you'll get that mistake. Now on the daily, we find the fair value gap, find it being mitigated. As exactly what I said before. On the monthly, we expect price to first, most times, go down, come back into this area, and then run back down. That is what we usually expect. But in a scenario where we are having price doing its beautiful thing, it's dancing, it's going down and down and down, it's not coming back up. So we need to start looking for places where it actually did some little bit of pullback and then continue. So that pullback is what I found here on the daily. Now, finding this daily fair value gap, the next thing on my strategy is to look for something called a sharp turn within the next 2 time frames below. So I'm looking for a place where price went up and suddenly started going back down. Sharp turn, and at the sharp turn, I'm looking for a sharp turn, not an intermediate. There's an intermediate term high, intermediate term low. There's a sharp turn, which is a short term high, short term low. Sharp turn are short-term highs with fair value gaps. So they're like a point where you find price just starts to fall or go up, and then it creates a fair value gap as it does. So for example, this right here, as you can see, this right here is a clear sharp turn. This right here is a sharp turn because price went up at this highest point, started coming down, and it left a fair value gap behind. So that's not really a sharp turn, sorry. This is a STH, short-term high. And a sharp turn is where price does this, and possibly after this, immediately after this, we now find another. Let's say we then see something like this. We find another candle, and then we find a second candle, and then there's a fair value gap here. So what we're going to be seeing is something like this. So there will be a fair value gap here, as there is a fair value gap right here. So a fair value gap in and a fair value gap out. That's a sharp turn. I will delete all of this. So I'm going to be looking for a sharp turn. So it's a bearish fair value gap, and we expect a bearish sharp turn. That is a fair value gap upwards and a fair value gap downwards. Now I'm going to start looking for such scenarios on the 4 hours, and I would stop at the 1 hour. So I go to the 4 hours. On the 4 hours, right there, you can see it right there. It is so beautiful, so clear. Right there, 1 up going in, 1 out coming down. This is every single confirmation I need. This confirmation is what I need to chase for 0.1. That's like basic. But you could also decide, in case you did not find it on the 4 hour, you can go as low, and this should be your lowest, as low as the 1 hour. Like I said, you could go 2 time frames below. So if you find a fair value gap on the daily, you find mitigation occurring on the daily, you could jump at most to 1 hour. So on the 1 hour, you can see again we have the ins. This is one in, and we have, so there's no out here actually. It's not an out. That was not out. This is the first out. So I personally like to color my fair value gaps. So bearish fair value gap red, bullish fair value gap green, so that I don't have to overthink it. I just like to do this on my own terms. This is my personal term, and I like to label them. You can see I have my labels at the side, but in this case I will remove all of this. So what I did, my own findings was this. So I went down to the 1 hour, and by the time I turned it on, you could see this is where I decided, oh, I should short this market. I should definitely short this market. But guess what? I did short it. I short this market, but I caught it late. This is 8 a.m. in the morning in Nigeria. This is 9 a.m., 10 a.m. I came into this trade around past 11. So I'm going to show you the first trade. I want to show you the first trade only. I'm going to blow out the second one so you guys don't see it. I don't want you guys to see the second trade yet. So this is the first trade, and I traded this account. Now the thing is this, so I did not really want to trade. I wanted to just mess with the account a little bit and just to test and play. So I didn't select a properly calculated lot size either. I just went in, okay, let's just play with the 0.05 lots. Normally on a $10,000 account you could go all the way up to 1 lot size, but I personally prefer to play it way more safer than most people. So I like to use at most a, should I say 1%, 0.5% of my account balance. So it means I'm going to set a stop loss, and I'm going to calculate 0.5 of the account balance. So that will be, I cannot actually do the calculation. I love to do the calculation on my phone, because what I do is on Xness, when I come into the sell, buy, whatever order on the phone, there's a space that says calculates something, I think PP information, something calculate. I'll record a video of that with my phone. I'm recording with the phone right now, but I will do that. I think let's just do that with this phone. I'll go select where's my screen recording? I can't find my screen recording. Okay, so I just did the setup. Right, so we're recording on the phone, and I want to show you guys exactly what I was talking about. So if I wanted to place this trade on my phone, I'll go to EU, that is EURUSD, and I click on sell. So you can see it's right in 12 lot size here, volume 0.12. So for example, let's say this is the exact thing as what we're seeing on the system, right? And I will go to the 1 hour, and I'm supposed to chill with an ST. After I find an ST, let's just look for a random ST. Okay, I found an ST spot. That's perfect. So I'll place this trade and I'll say right here, right? Now that I have a stop loss, the next thing I will do is I'll say position size calculator, percentage. I want to risk a maximum of 0.5 of my account, and I'll click on it. Oh, sorry, negative 0.5 of my account. So automatically it sets my lot size to 0.09. So this is exactly what I was supposed to actually do, but I just, you can see it's actually $50. Yeah, so it's actually $50. I was quite correct. So I should not risk more than $50 on this trade. Though, if you are one of those people who are taking like a larger risk, you could be looking for 1% of your account. So you can see it's actually 0.18. So this is how I calculate. I prefer to use the phone to place trades, but I didn't use my phone for this trade. I just placed with my system, and the thought in my head was simple. The thought was just simply to just test the trade. Just test the trade. Now I entered this trade. Now something is wrong with TradingView. Not really trading. Trading is wrong with Xness, where they set the wrong time. The time I entered this trade was past 11. I don't know why they like to record 1 hour prior. Whenever you change this, because I changed to 1 hour plus, it still records as UTC, not +1. So if I should put the order, I think I left that order here. Yes, right there, that's the order. So this is the order I placed. Stop loss right at the ST. Take profit at the 0.1. You can see right where I entered, like exactly what I said. I entered past 10, 11, where price had moved away from my position. Is it there? I think it's here. I think we need to correct this thing. Entry price is 1423. Actually, this is 1421. Take profit price was supposed to be 429. Stop loss was supposed to be 505. Alright, so yeah, this is the target. This was the first target, and FOMO. On the demo account, I got FOMO. Yeah, I got FOMO on the demo account. I found this actually I was looking at this trade in the wrong time frame. That's why I went off. So I kind of was just, after I placed the trade, I made it into the 5 minutes, and then I was looking at the trade on the 5 minutes. So I was thinking, oh, the 1 hour candles are beginning to print back upwards. You can see the fair value gap in, fair value gap out, again and again, meaning consolidation is about to start happening. So I just freaked out and I closed the trade. When I closed the trade, I immediately realized, oh, I was looking at the 5 minutes. And guess what? This is where I placed my second trade, out of FOMO and desperation. So I placed the second trade. You can see the value right there. I lost the money I made. So that's why I ended up with 55 cents. Not enough, not good money. Not good money. I actually made $2.60 on 0.05. If I had used the proper lot size, I think the money would be around $4 or so. Around $4. It would have been something still a little bit tangible. I mean, $4 in Naira should be around 5,000, 6,000 Naira currently, but it's a demo account though, forget about that. So my second trade, absolutely bonkers. I did something that I was not supposed to do. I did the worst thing I was not supposed to do. I went into scalping mode, and I lost the money I made. Luckily I walked out on the trade before I lost everything. So when I went into scalping mode, I took this place as my ST, that is my STH, short term high. Targeting for, you can see where I was targeting, I just went all the way down. And this is something I forgot. So because I'm placing on the 5 minutes, I'm supposed to be targeting a 1 hour liquidity spot. And if you look at this right here, a proper 1 hour liquidity spot is right here. You can see if I had left this trade right here, I think I'll put this up right clean. So if I had left this trade right here, I would have been in more profit. I actually was making around same $2 plus or so around this point, and I just stupidly left it running. So on the 5 minutes, target the 1 hour. On the 1 hour, you can be targeting the daily liquidity point. So if I had stayed in the trade, I didn't come back into the trade anyway. If I had stayed in the trade, you could see where price is currently. So it means I would have even gone twice long. That would be around $4 right now and increasing. But nevertheless, I don't feel bad about it. I just feel that happened and it's a lesson. So I also recorded it. Like I said, I said I was going to be recording these videos because I'm going to record it because I want to record videos about it. So I recorded it in my Notion. You could find it right here in my Notion. This is top-down analysis. Was it this point? Yeah, it was here. So my journal, I stuck to my word. I recorded it, the profits and the loss trade, and I also included the information for myself. So don't trade until clear show of momentum is seen. Next time, I'm supposed to also add I think it's time I actually add that. Okay, it was here. This was the 1 hour target. You can see it right here in my Notion. So you can see exactly what I just said. This was supposed to be the 1 hour target. I was supposed to close out at this point. I just foolishly left it. But that was how I was supposed to close out on the loss trade. On the win trade, you can see my analysis was on the daily. So on the daily, you can see the analysis was quite simple. After seeing the monthly fair value gap, I looked for a daily. On the daily, I found this fair value gap, and if we go down to the 4 hours, this should be the 4 hour chart. Yeah, on the 4 hour chart, you can see I saw that first fair value gap in, and I was expecting the fair value gap out. So what I did was I went down to the 1 hour, where I clearly found the fair value gap in and the fair value gap out, two fair value gap out for that matter, and that was where I dived into the trade immediately. And then you could see after diving into the trade, I saw it coming back. You can see I was looking at the 5 minutes. The biggest mistake you should make. I should be looking at the 1 hour, and I wouldn't have left that trade, honestly speaking. Well, lesson learned. Next time, place a trade, sit on the 1 hour. So lesson learned. Watch price on the time frame you placed the trade with. So you can see clearly I have this Notion formula where where is it? Right here. So I had this Notion formula where when I place my entry time frame, it tells me the style of trade I'm making. If it's a day trade or a swing trade or a scalp trade. You can clearly see that this other one, you can see right here, is actually here a scalp trade, and you can see this the profitable one was a day trade, which is a swing trade. But all in all, guys, this was my trade for the past 2 days. I'm not going to jump into this market. Actually, I'm not even going to be anywhere close to the market for a while. Not because I took a loss, not that, but solely because we are literally in a consolidation time frame. Like, if I should remove, just hold on, if I go back to this map, this calendar, and we remove the brown candles, you can see this week is literally just blank until after Christmas, and then unemployment claim, and it's blank again until January. So January is when the market is going to say hello, we're back, we're going to start working again. So but for now, market analysis and lessons is all I'm going to be doing. Market analysis lessons, market analysis lessons. I'm not touching crypto nor metals. So that's all for today. If you did like this video, please click a like button, subscribe to the channel, and leave a comment below on, like I said, mistakes I made, things you think should have been done better. If you think there are like errors I made that I didn't notice, you could as well hit me up in the comment section. If you're also a new trader and you're coming into the Forex market, you're learning this stuff, do well to also same. You could chat me up in the comment section. We'll hit up each other and we'll get into this thing together. But like for me, the demo trading for now is to make sure I really understand the concepts I'm trading, to understand the knowledge I'm supposed to use in the trading space. And from then on, when I finance an account, I'll start financial, like real trading. You guys are going to see it here, the real accounts. And then also probably I'll go into prop firm, do some prop firm trading, and you'll still see that. But for now, I'll catch you all on the next one.